official cash rate is an interest rate that defines the wholesale price of borrowed money. This directly affects the commercial banks, determining the rates they offer their customers. So it affects the rates banks charge for borrowing and what they will pay their customers for saving. On August 7th this year, I, the Reserve Bank Governor, made a decision which stunned the markets with a 50 basis points cut, setting the OCR to 1%. The primary goal of the Reserve Bank is to maintain price stability in New Zealand by keeping inflation with the target zone between 1 and 3%. So the tweaking of interest rates and the timing of these tweaks is the Reserve Bank's way of responding to and influencing inflation. But the fact remains that a lower OCR might not be the solution that everyone hopes it will be. Growth in investment and spending looks like it will continue to weaken, and not because borrowing costs are a restraint. In the face of monetary policy becoming less effective at stimulating the economy, is it still worth it to cut the OCR to zero? What are the pros of cutting the OCR to zero?
Negative interest rates will result in a decrease in the demand of the NZ currency due to foreign investment opportunities in the NZ being unattractive. This would depreciate the New Zealand dollar. The depreciation of the New Zealand dollar would be beneficial for our exported goods sector and companies such as Fonterra, as our country would be relatively cheaper to do business with. The consumption spending of the population and government would increase because there's much less incentive to save money with a bank. An increase in consumption spending means the total demand across all goods and services, aggregate demand, would increase, resulting in an increase in domestic growth, or GDP. Increased government spending would result in more funding for essential social services or infrastructure.
What are the cons of moving the OCR to zero?
There are many issues with moving the OCR to zero or negative, so this is because it might not work as well as it is intended to be. So in Europe, for example, the European Central Bank moved the rate to negative, and many have stated, including the Vice President of the European Central Bank, that the intended effects of the move haven't really been effective yet.
Moving the OCR to zero or negative may have adverse consequences on the housing market. This is because moving the rate will increase bank lending. This may be beneficial from an economy stimulating standpoint, somewhat dubiously. It may put untoward pressure on the housing market. This is because the OCR has a direct impact on other interest rates, such as mortgage rates. With a negative or zero OCR, this will lower mortgage rate levels to the point where borrowers will be enticed to borrow more. Lowering the OCR may also impact savings rates, both the savings interest rate and also the numbers of people saving. New Zealand does not have a strong savings culture, like China and some other European countries. This may dampen down already low savings rates and may cause bank runs as a result. People will take their money out of their banks and use it on investments for higher returns. And although this may be a good idea for stimulating the economy, that comes as a great risk, as some banks, if not adequately prepared for such a bank run to occur, then it could cause a massive shock and send a bank into collapse, potentially. Lowering the OCR will also impact on import prices by increasing them as the currency is devalued. This is primarily a concern for commodities such as fuel, as we obviously don't have it here ourselves. We rely on overseas imports. And with a weaker buying power, that could seriously drive up subsequent commodity prices and the cost of living throughout New Zealand, where it's already quite high.
In conclusion, I believe, as Reserve Bank Governor, that the cons far outweigh the pros, and so we are against the OCR moving to negative.